Okay, hello everyone, this is Capitaland Ascendas REIT first half 2024 financial results, dated 30th July 2024. Okay, after these slides, I will also cover the third quarter 2024 results. Right. So, yeah, we'll go straight into key highlights for first half 2024. Right, distributable income is up 1% year on year, but DPU is down 2.5% year on year. Right, so as investors, we care about this value more. Right. Investment properties, the valuation is down 0.3%. I think this is okay, not too bad. Right, healthy portfolio occupancy, but it's actually lower than as at 31st December 2023. So slightly worrying. Mostly from the US side, as you'll see later. Okay, positive portfolio rental revision of plus 13.4%. Right, that's great. Right, leverage is marginally lower at by 0.1%. Okay, healthy cost of debt. Stable cost of debt rather at 3.7%, right? But it's higher than as of 31st December 2023. But do note that they have perpetual securities, right? So this is not their actual leverage, in my opinion. Right. Anyway, we'll look at the how come we get minus 2.5% DPU. Gross revenue is actually up 7.2%. Okay, mainly due to the acquisition of these buildings. Right, also due to the completion of development of these buildings. But net property income is only up 3.9% due to higher operating costs for the properties. Right, DPU is amount available for distribution is only up 1%. It's mainly due to higher interest expense. Now DPU is down 2.5% as a result of larger unit base. Alright, and this larger unit base is quite the amount of units that has increased from first half 2023 is quite substantial. So it's 3.7% increase, but this is due to two reasons. Firstly, it's due to the private placement in May 2023, right, to purchase this acquisition, right, as well as the issuance of partial payment of base management fee in December 2023 and June 2024. Right, so we look at the first half 2024 versus first half 2023 performance. Right, you can see gross revenue is up 1.1%. Right, net property income is up 2.7%, and amount available for distribution is up 1.2%, and DPU is hence up 1.1%. Right, so this is quite interesting because if we compare first half against first half last year, it's down 2.5%, whereas here it's actually up by 1.1%. So I just had a look at this is Retirement's block, okay, owned by Vince. Right, I just wanted to see whether there's a trend of the DPU being lower in the second half than in the first half. Right, so yeah, this also as of 30th June 2024, as the same as the slides I'm looking at currently. Right, so I just wanted to look at DPU trend. Right, so you can see here, okay, Ascendas only gives dividends every half a year. Right, so second quarter 2024 is the results we just saw. Okay, and you can see that the last 3 quarters is actually a downtrend. Right, so if I compare the second half, right, which is this one versus this one, you can see that the second half for 23 is lower than the first half. Right, but for 22, right, the second half is actually higher. Okay, for 21, the second half is lower. So there's no clear trend of one half being higher than the other half. Right, in fact, if you look at the latest few numbers, right, so from fourth quarter 22 to fourth quarter 23, right, so actually these are the half year results. It's third and fourth quarter DPU and third and fourth quarter DPU. Right, you can see there's a clear downtrend. Right, so this is the first time that we actually arrested the trend. Right, so there is a slight uptrend here. Hopefully this is a sign of things to come, that they can carry on trending upwards. Right, so that's my hope for Ascendas. Alright, so anyway, yeah, going back to this, not going to talk about DPU. The AI is quite small, so not going to talk about it. Okay, balance sheet, I'll talk about third quarter results in this same presentation. So balance sheet, we'll talk about it later. Right, yeah, we want to see occupancy. Right, remember this as of 30th June 2024. Right, you can see that Singapore is down very slightly. United States is a concern. You can see it's one trend down. Right, Australia and UK look like and UK and Europe look like slightly recovering, right? So it's down then up, right? And total portfolio occupancy it shows the rough. Actually, it's a downtrend, right? Yeah. So actually, this is lower than 93.3%, right? But US is the main culprit, right? So you can see that generally for Singapore, there are some issues with business space properties. Later we will see this is the main issue, right? I'll show you why, right? This is less than 50%. The other two are okay lah, 94, 95, not too bad, right? US, yeah, decrease. This is the worry, right? You can see this an empty logistics property. This is also an empty lot. So there are two empty logistics properties in the. Sorry, this is a logistic property and this is a business space property, right? So at least two properties are empty in the US as of 30th June 2024. Okay, Australia is still okay. Alright, UK and Europe also roughly okay. Right, this one we'll look at, I think, later in third quarter results as well. Alright, this one also all we'll look at third quarter results. Right, so this is again still first half 2024 results, right? But I just wanted to note that their expectation for second half wasn't very good at first. So you can see, okay, everything talk about it is quite good. For multi-tenant building, the rental revision is positive 11.7%. Singapore and US also very good, both plus 11.9%. Australia, UK, Europe, you can see the numbers 7.7%, 10.1%, all very good results, right? So the average is 13.4, but they said the average rental revision for FY 2024 is expected to be positive high single digit range, right? This is a bit disappointing in terms of projecting for the FY 2024, because if it's positive high single digit range, right? Single digit means, let's assume 9%, right? So if for the full financial year their rental revision is 9%, the first half is plus 13.4, the second half is roughly 4.6%. That means to say that the rental revision for second half is going to be quite disappointing. So later on we'll try and see whether that's true or not. We'll look at the quarter results. Yeah, the rest I don't think is so important. Yeah, so let me see what the other one talk about. Oh yeah, this is the occupancy as of 30th June 2024. Right, you can see where the problem areas are. We just look at Singapore alone, right? So you can see Singapore business space, right, got some issues. One off a little bit low, 92%, right? But you can see international business park, less than 50%, less than 50%. Right, Changi business park is really quite bad, right? Less than 50%, less than 50%, less than 50%, right? At least 3 places less than 50% and 2 places less than 80%, right? Actually, there's an occupancy issue in the whole business park, right? So, yeah, this one 50% also not very good, okay? The numbers, right? Life science is okay-ish, right? But not that great for this Singapore Science Park one as well, right? And yeah, this one as well. Okay, industrial is quite strong. Very few places with issues, right? Only one empty, right? I'm not sure why this one is empty for so long. Okay, yeah, but the rest you can see they have a lot, and generally this is not a very big property lah. Okay, this is the lettable area, right? The rest are more or less very high or 100%, right? So not worry about that. Data center very strong, no need to talk about it. Logistics very strong as well. Just 1 or 2 underperformers right here. Not very big one, so not worrying. Okay, Australia generally it looks okay, except this empty one here. Alright, the rest is alright. US got 2 empty as we mentioned earlier, right? 1 empty here and another empty one here, right? 1 logistics and 1 business space. Yeah, UK and Europe I think is quite good. Yeah, you can see 100%, right? Yeah, this one's slight concern, but generally still okay lah, UK and Europe. Right, so we move on. Right, so yeah, just a short discussion of management fee. I think that we just want to check whether how high the management fee is, right? They take 20% in units and 80% in cash, right? That means that and this 20% of the units paid in management fees paid in units is about $8.6 million. So actually I got this article out, right, to have a look at it. So what they did was they issued this amount of units at this price, to pay management fees, right, for this period, which is the period we are discussing. Right, so this is about 8.6 million. It's quite a small percentage. I calculated it to be about let me check. It's quite close to retirement's calculation. I calculated it to be about 2.6% of first half dividends, right? So that means 2.6% of the dividends that they pay out to us, right, came from management fees that they instead paid in units, right? If they had paid out in cash, our dividend for the first half would drop by 2.6%. Right. This one is for the full year, the full last year. That means to say third quarter 2023 to second quarter 2024. So I think retirement calculated, or Vince calculated 2.7%. Right. And also there's some income support, but it's not too bad. You can see that the percentage is very small. It's like 3.5%. Right. That may be one-off and not operational. So Ascendas dividends is quite steady, I would say. Right, so let's quickly have a look at the third quarter 2024 results. Alright, this is dated 25th October 2024. Okay, so you can see that leverage is slightly up. Cost of debt is flat. Occupancy is slightly lower. Okay, rental revision is still plus 14.4%, but this one I'm not very sure. This one is for the full 3 quarters or how they calculate this, but it looks decent. It looks better than what they expected earlier, because they look at what they expected earlier. They were saying that the whole year only something like, I think you remember what we were talking about. The expectations were not very high. We were expecting second half is 4.6%. So this seems to be a decent performance, right? And they divested a property, right? And they divested for a good profit. Right, so these are the completed AEIs, so hopefully they start to contribute soon. They should. They should start to contribute soon. Right. They divested this property, and the divestment was done at quite a good price, right? 93.2% to original purchase price and 67.1% premium to valuation, right? So actually it's valued at book at this amount, but it's sold at this amount, right? So 67% higher. That's very good. Right. Balance sheet adjusted interest coverage ratio is 3.5, right? That's quite healthy, right? Leverage is 38.9. Okay. Weighted cost of debt 3.7%, quite stable. Right, you can see that debt maturity is quite flattish as much as it can be. Right, so not so concerned about interest rate rising. Probably expect it to be flat roughly, right? Hopefully it drops. Okay, hedging, not so worried about this. Singapore occupancy stable at 92%. I think this one is the worry. I think it dropped again. Right, so you can see that it's a further drop. Right, the last report we already saw it was 2 quarters of consecutive drop. This is the third quarter of consecutive drop for US. Right, so US is a bit of a concern. Right, Australia also dropping. Okay, this is not so good. Right, you can see Australia originally it swung up, right, then now it come down again. Right, and this is a near empty property, logistics property. Alright, and I'm not sure if this tenant is going to take up the whole space, right? Because it's drastic drop from 100% to 6.1%. So these are issues that they will have to contend with. Right, this is the only pretty good point of the REIT. So we look at rental revisions. I think this, so actually third quarter 14.4%. So that they confirmed it here. I wasn't quite sure which period they're referring to in front, but third quarter the rental revision 14.4%. That's quite good. Alright, you can see that the performance come from logistics in Singapore, right, business space in US, right, and logistics in Australia. Looks like logistics still got quite high demand. Right, not going to talk about this. Right, portfolio expiry. Alright, I think it's a good thing if the revisions are up, that the expiry is coming out. So Singapore, hopefully this will help increase revenue. Right, US not much . This one also hopefully will help increase revenue. yeah, so this is the market outlook. Okay, for SG, right, third quarter economy quite good, 4.1%, right, extending the 2.9% growth in second quarter, right. So from 2.9 to 4.1%, that's a good thing, right. If the GDP is doing well, the country is doing well generally, the economy should do well and they should be able to increase the rents. That's a good thing, right. Core inflation 2.8% from 2.7%, not too much different, right. They will consider selective divestment opportunities. If they can divest at 67% above valuations, yes, we are happy for them to carry on divesting, right. They're trying to capitalize on growth sectors such as technology, life science, and logistics, right. I think logistics seems to be the still very hot sector right now according to their numbers lah. Right. US, I don't think there's too much to say. 3%. Yeah, occupancy is a concern there. Right, Australia modest growth of 2% due to subdued household demand, and 2024 1.2% growth. Okay, lower pace than 2023. Right, there's the sense that industrial and logistics markets has seen the normalization of demand resulting in slower leasing activities, right? So not very optimistic about Australia, right? Although the numbers here seem to be quite good. Okay, UK and Europe, slow growth lah, very slow growth, right? So yeah, we're going to cover sustainability. I think the rest I won't cover, right? So I think there's this good write-up that I thought would be interesting to discuss, right? I'm not going to discuss everything because we're just going to look at valuations. Yeah, so interestingly, Retirement came out with this pretty recently anyway. It's comparing industrial REITs, right, on 3rd December. Yeah, so just a few days ago, right? So I wanted to have a look at it and see how Ascendas stacks up against its peers. Right, so I'll just look at the valuations. I've been the sorry, give me a moment. Okay, yeah, let's look at the current, sorry, I just accidentally clicked. Current valuations in terms of dividend yield. Ascendas yield, I believe he uses TTM. That means the dividends based on the last two halves, right? So that's 5.71% is how it stacks out against Mapletree Industrial, Fraser Logistics and Commercial Trust, and Capital DC REIT, right? You can see Capital DC REIT dividend very low, right? Because it's a very popular REIT and generally the dividend has been growing quite well for Capital DC REIT as far as I can remember, right? If we look at 1 year versus 1 year dividend performance, right? That means how their dividend performance has been, right? So Fraser Logistics and Commercial Trust is 1 standard deviation higher currently, right? So this suggests that the yield for FLCT is good right now. Okay, because its average is 6.61, right? Up to 3 years, 2 standard deviation. Up to 5 years, 2 standard deviation. 1 standard deviation. So you can see that if we look at long term, right, what is cheap among these 3 REITs in terms of DPU is actually Fraser Logistics and Commercial Trust. Okay, then in terms of price over NAV, again, quite clearly everything is above NAV, but given that Ascendas sometimes can sell its property at 67% above valuation, maybe you can consider that they should trade slightly above NAV lah, but 1.61 in terms of versus its long-term average, right? Let's have a look, right? It's roughly average lah, right? You can see that its very long-term average is about 1.25 price to book, right? That means to say it's slightly below, right, but not significant enough to warrant a -1 standard deviation here. But if you look at for FLCT, again, it looks cheap, right, because it's -2 standard deviation above its average, right? Normally FLCT trades at 1.1 times book value, right? I want to say that I'm not advocating buying FLCT. I'm just saying that from the numbers, it tells a story that FLCT seems cheap among the 4 REITs over here. Personally speaking, this is not financial advice, but I will only consider at this point Ascendas and Mapletree Industrial Trust. Keppel DC REIT, the yield is too low. FLCT, I'm a bit concerned, right? Normally, if the price is depressed, right, there's a good reason for it. Could be due to the fact that from the report earlier, you see that they said Australia, there's some subdued demand based on their projections, right? Yeah, that could be one possible reason, right? So anyway, yeah, sorry, I think this presentation has gotten too long. Please remember, none of this is financial advice. All right, thank you for listening. Right, so this is the part where they said that, yeah, looks like there's lower leasing activity. This might be priced into FLCT, right? So that means the DPU may drop further in the near future. Okay, I'm not very certain. I do not cover FLCT. Right, so again, no financial advice given. Thanks for listening.